you've decided to reduce the size of what you were planning to sell earlier. Now, what I want to understand from you, there were certain reports all along which spoke about how initially the expectation was about $7.5 billion US dollar of valuation, which now I think settles at about $3 billion. $4 billion. I'm sorry. Is it the reason why you've decided to sort of cut down on what you were intending to sell because you think there's better value that you expect going ahead and you would want to save more to sort of, you know, look at that valuation and sort of maybe unlock that value at a higher price?
So Yash, from the beginning, our issue is largely a primary issue. Even now, if you think almost 90% or more than 90% of the capital raise is going to be primary.
Correct.
Because we are investing for growth and we are investing for making this company and the Indian EV ecosystem much larger. So the secondary was always a small portion of it, and my share was a small part of that. And you're right, I have cut back a little bit because I do feel there's a lot of growth ahead. There's a lot of opportunity for investors to make money ahead, and I also see my own, share value rise in the future.
Okay. Harish, to you, as far as the objects or the proceeds are concerned, you also mentioned that about 800 crores is what you expect to use towards repayment of certain borrowings. Where do the consolidated borrowings at this point of time stand for the company with the utilization of the IPO proceeds? Where do they go to? And what is a comfortable level that you see as far as borrowings are concerned? Would you again look to raise it as growth picks up going ahead? Or do you think these would be the levels after the reduction where you would want to stay at?
So if you look at our borrowing strategy, where we have borrowed is for creating assets.
Correct.
And we are continuing to strengthen our balance sheet. Hence, one of the objectives of the issue is actually repay of debt, because it further strengthens our balance sheet as we go into the new journey. And we always borrowed and have borrowed only for creating the two-wheeler factory, gigafactory. So our investments have been, obviously, we contribute our equity into it, and the borrowings are substantiate that to that projects. So our borrowing strategy is primarily driving creation of sustainable tangible assets. So it's not for any other working capital use or anything like that.
Correct.
So borrowing strategies look, if we are embarking on these mega projects, banks are more than willing to participate in that journey with us. We are bringing in our share of equity, and banks are contributing the rest. So that's how borrowing strategy kind of spans out.
What will be the revised number post you use those proceeds, and how would it impact the finance cost largely for the company once the number goes down at this point?
So clearly with repayment of borrowings, finance costs will drop. So we are using 800 crores from the IPO proceeds to reduce our borrowing. And hence the finance cost will drop. And the thing is that the overall borrowing is largely, as I said, we have a term loan for our gigafactory and we have a term loan for our two-wheeler factory. So those term loans will remain on the balance sheet, and there are long-term term loans around it.
Thank you for watching CNBC TV 18, and do follow us on all our social media platforms for news, updates and more.